Hello everyone, Paul here. Today I'm going to talk about mainly the S&P 500 and kind of like my thoughts, where it's going, and what I'm going to be doing, my strategy. I might talk a little bit about the other cryptos, but mainly I'm going to talk about the S&P 500 today because with the S&P 500, it's pretty much the one that I recommend because it covers all the big popular companies out there. So anyway, what I kind of want to talk about is my strategy, and I try to talk about this over and over again. I only trade on the day. I do look at like the hour and all that, but kind of just to see where it might go today. And basically, uh, I my strategy is I just have I've talked about it, and I just use the 8 EMA, 8 moving average exponential. So you just you go to your settings, you go to indicators, and then you just search for moving average exponential, and that's the one you get. And what you do, you just change the setting to an 8, the input, and change the bright color to one that stands out. And then you have it like this. But every time you switch if you switch from day to like an hour, you got to switch your chart. Let me show you that real quick. Whenever you want to base it on like a different time, you just change your time frame, and then your lines will match to it. But I also have the RSI on here because you can't just do it with just the 8 EMA. You got to have some kind of knowing of where the strength is. And once you do get in, now part of the strategy that I do, I only trade in the day. So you can see there's a red candle pushing down, and ever since then, the market's been going down. My next strategy going forward is looking at it by the day, but waiting till there's a green candle pushing up through the 8 EMA. That's the next time that I'm going to be doing a strategy, and I will be buying a contract for 2 to 3 weeks. So currently what I'm doing is I'm just saving enough to buy that contract while it's going down, because I missed this one right here. So how much gains would you have made if you caught this? If you bought a put when everything started going down, the indication was right there that it was going to start going down. And if you bought a contract for, well, it's been 15 days. So 15 days, it's been a difference of price for $29.32. $29.32 times 50. So you made about $1,500 in 2 weeks if you caught this. That's how strong this strategy is, and it's pretty repetitive. So what we can see right here is, if you follow this exact chart here, last time that happened before this, there was a call. You see the green candle right here. And if you caught this, and you did 15 days, let's do 14 days. You did 14 days, 30. So that's probably, that's another like 1,500 right there. So the reason I extend my contracts is because, like I've said this in yesterday's video, if you bought down here and you waited like, I don't know, just 7 days. If you waited just 7 days, you would have made profit, but you would only made 6 times 50. So that's like, you would only made like $300. somewhere in there. You would have missed out on all of this. And if you sold at like 2 weeks right here, you would have made a lot more profit. You made that 1,500. If you bought a contract for a month, 30 days, you would have been, let's see, 30, that's 30, 28's okay. 44.05. That's 44.05. 44.5 times 50. That's over $2,000 right there. And then you wouldn't have had to wait. You would have had to wait maybe 2 days. Let's see, 1, 2, 3, about 4 days. You would only had to wait 4 days before the market started going down again. So that's why, because when you extend your contracts to a longer period of time, you'll make more gains. If you cut it off too early, you won't make as much money. If you want to do the cheap route and buy, I think $400, and that lasts maybe a week, you'll get that gains, but it's a small amount of gains. And personally, you would have to wait all this time for it to go a different direction. And if you do that, you come in here. If you came in here and you only did a week, yeah, that's 15.98. 15.98 times 50. $800. You'd be missing out on at least another $1,000. And you'd be having to wait. You would have to personally wait for it to correct 21 more days. So you get your $800 or whatever, but you have to wait nearly a month. And if you come up here and you get your gains, and I've talked about this yesterday, get your $800, and you decide, hey, I want to get back in at the price down here. Well, the price down here is going to be a lot more money. It's a lot cheaper buying the contract for an extended period of time right here. If you bought it for 2-3 weeks down here, you would have all this covered. But if you sell and then you're like, hey, I want to get back in, it's going to be a lot more money. So it's worth it, in my opinion, to buy the contracts for a longer period of time, at least 2 to 3 weeks out. So the last 2 cycles, you see, from what we can see right now, we could see if you got in right here. Now you could tell just by looking at the EMA. It's far off. The candle is far off from touching the 8 EMA, which means there's probably a lot more downtrend for it to go. And this could continue for a while because pretty much the whole market is down too. So this could continue for a while. So the RSI is still down. So eventually it's going to go back up. So what I'm doing personally is I'm saving up enough to buy a contract for 3 weeks. The moment I see the green candle pushing through the 8 EMA, that's when I'm coming in. So that's the last 2 cycles. Let's just see if there's... Now, I mentioned this yesterday. These 2 I would not have got into because the RSI is in the middle, so I wouldn't have got in for that. Now, this one up here, we see the... Let's see. We see the red candle pushing down. And then what happens? The RSI also indicates that it's going down. So this was a good gain. This was a good gain right here. Where would it go? It's right about here. 12 days, you may, oh yeah, that was a great gain. 12 days, 44.24. 44.24. That was a good gain. 8 days to make $2,000. Not bad. So whenever it's sideways like this, you see the RSI is kind of in the middle there. That's the indication to me to hold off. I only do my option trading when the RSI is either at the top or it's at the bottom. And I see the candle peeking through the 8 EMA. That's the time that I get in. When it's a bunch of sideways stuff, it can really go in any direction. Now up here we can see, I'm going to do it one more time. See right here where the candle starts, you see the red candle pushing through the 8 EMA, and you notice that the RSI is at the top. So that indicates to me that it's going to go down because the RSI is at the top, the red candle just pushed through the 8 EMA, so it's a big indication to me that it's a good time to do it. This is 28 days. So if you did a 28, 30, here's 30 days. 30 days, 41.29. 41.29 times 50. Another $2,000. $2,000 in 30 days. Catching that. So that's why I do this strategy. Now, a lot of you watching will probably be like, why don't you trade on the hour or the day? I trade on the day because it's a lot easier to see the patterns. And it's a lot, when you have to do it by the hour or the minute, you could mess up. But let me just show you the hour real quick. And I got to change my, let's see, if you wanted to do it by the hour. Now I'm just changing the RSI to an hour. Okay. So this is the same thing. Same thing I'm talking about, it's doing it by the hour. So if you want to do it by the hour, it's the same thing. But I personally just do it by the day because I want to set it and forget it kind of thing. I want to wait a while. If you do it by the hour, you kind of have to constantly keep looking at the price, see if it's pushing through the 8 EMA. So we see right here, there's a red candle pushing through the 8 EMA. And if you did a put, you would have made 7.03. 7.03 times 50. So you would have made $400. Now you can do, if you don't do it by the day, I would do by the hour. If you're the kind of person that just wants to make, like $400 a week or something, like it's really easy to find, little moments where it goes up or down. So you can make short gains. You wouldn't have to, if you're doing it by the hour, you wouldn't have to buy your contracts for 3 weeks. You don't have to buy as much of a contract. You can if you want, but to make like $400 a week. This is for the people that want to make like a little bit of passive here. Moments like this, you see the green candle. Now this is very brief. This is why I only do it by the day, because this is very fast to catch this. You see the green candle pushing up, so you would do your contract. And this one is a 6.48. That's like another $400 or something. Now the moment up here at the top, we see the red candle pushing through the 8 EMA right here. So this would be another moment. So if you bought a contract right here and caught all this down movement, so this is 5 days. So that's 24.17. So that was a good run. 24.17. That's $1,200 right there. So you can, if you do it by the hour. If you don't do it by the day, next thing I would suggest is doing it by the hour. But it's a lot faster. So you have to keep your eye on the chart a lot more than you do if you're trading by the day. But if you need a quick, $400 or whatever, you could do it, but you won't make long-term gains. So we see over here, red candle pushing through the 8 EMA. You got in right around here. Got here, and you just bought your contract. You wouldn't have to buy a big one. This is 5 days. Suppose you could buy a contract for a week and you'd be okay if you're doing it by the hour. So this one is 1579. Let's check that one. 1579 times 50. That is about $800. So yeah, you can make passive income doing it. It's really up to you guys, whichever one you want to do. I personally do it by the day because personally with the the pattern day rule with the stock market, you can only trade 3 times a week. And when you're trading by the day, you really can only do it once a week pretty much. But if you're doing it by the hour, you have to get in and get out, and you have to pay attention to the pattern day rule. Anyway, that's kind of when I want to talk a little bit more about what I do with my strategy. Now I'm going to go one more time. My current strategy going over. Let me change my EMAs real quick. If you guys want to follow along with what I'm doing, now again, this is not financial advice. This is for entertainment purpose only, not responsible for any profit or loss. But anyway, my plan of action. I've mentioned this many times. If you want to follow along and do what I'm doing, you got to set up your 8 EMA, your RSI, and look at it on the day. And the moment there's a green candle pushing up on the 8 EMA, that's when I'm going to do a call option. That's the next time that I'm going to do an option for this. And if you guys want to do it, it's up to you, but I'm not responsible for any profit or loss. That could happen. We don't know. It has to push through first. So I'm saving up for a 2 to 3 week contract, and I'll keep you guys posted on what happens. But the indication for that to happen, it's not happening right now. My guess is we still have a little bit downtrend to go. Anyway, if you guys like this video, if you found it helpful, make sure you hit the like button, hit the subscribe button. I'll see you guys in future videos.